G'day folks, welcome back to Pete's Investing. It's another update for gold, silver, Bitcoin and the US dollar. Now both gold and silver have risen since our last update and the US dollar and Bitcoin have dropped slightly. And if we go to the heat map, you can see there, first off, gold and silver are bullish across monthly, weekly and daily timeframes. US dollar and Bitcoin are also bullish, however they've broken into a bearish outlook on the daily level based on the CCI 150. And there's a heat map for the other instruments for your reference, which we cover in occasional videos as well. So first looking at gold, and I zoom out on both of them, you can see here on the daily and the 1 hour chart. First we'll look at the stochastic market forecast indicator up here, and it's well overbought on both. It's well above the 90 level, so just be careful about going too aggressively long. If I zoom in on the daily first off, the ADX is showing a bullish momentum as well, which helps justify the CCI 150, and that's our main trend indicator. So, but we do have a bearish divergence now. It's actually risen slightly since our last update, but that point there on the high there on the CCI 150 is still lower than that high there, which indicates a bearish momentum because the highs on the price chart are actually increasing versus the CCI 150, so that's a bearish divergence. Just be careful about going, again, too heavily bullish on it at this point. On the 1 hour chart, we do have another bearish divergence, and again, these are independent from different time frames. We had a couple of bearish divergences. You can see there, bearish divergence here, it fell off, another bearish divergence there with that double top there, it fell off, hit our target. We had another bearish divergence there versus highs on the price, it fell off, hit our target. And we're currently sitting on this latest bearish divergence on the CCI 150, lower highs versus higher highs on the price. Now I did draw this target previously before our last video, and if I redraw the Fibonacci, that was between that range there to that high. You can see that that's a 23-38% level, and that's how you measure all these target areas. We take it back to the previous low before the divergence started. Now because that's gained, the price has accelerated, but the CCI has dropped, we're going to adjust that to that high, and we're going to move that up to that level there. That's how we look at that minimum retracement level between the 23 and the 38%. So again, it's still got a way to go. We probably need to break below this VWAP moving average, the VWAP 50, before taking any short positions. But again, just be careful about going too heavily short. I don't normally trade the divergence. It just gives me an indication of where I might want to start taking profits if I'm going long and you see a bearish divergence, or take profits if I'm going short on the price, but I've got a bullish divergence on the CCI, so just be careful how you treat that. I'm just giving you the idea that it is actually potentially going to reverse to the minimum level at this point. If it drops below the 61%, as I always say, that's a key area to look out for, and that's a lot more bearish if that happens. Let me just delete that. Now, the other thing to notice as well is, as a trading idea, I normally trade on the trend of the monthly, weekly and daily when they're in alignment, like the gold price and the silver prices at the moment. So for example, back here, when the daily breaks to the upside, you can see there, you can actually trade it when the CCI also breaks above the moving average there. So whenever that CCI is above the moving average range on the daily, you can take those bullish trades on the 1 hour or the smaller time frames. Now, one thing to notice as well is the 1 hour chart is very volatile. So for example, you can see there, you probably would have got in there and got in out there with a very minimal gain, got in there again, dropped out again, got in there, maybe dropped out there, and etc. The other thing to do is you can always trade on a higher time frame. So look at the weekly, for example, and trade on the daily. So as an example, if I zoom into the weekly on the left, and I've got the daily on the right, you can see that there's a lot more stability on the CCI 150. So for example, when the price breaks above the moving average band at that point there, you would have started taking a trade from that point there and closed it out when the CCI breaks into that moving average band. So that would have been a nice little trade to make. Don't trade during that period. You don't go short at that point there, because again, we're trading with a trend, only going long during this period. So you don't take that. That may have been a false break there, but notice you may want to put a stop loss below those lows. So even though you might have entered there, stay in a trade, put a stop loss below those lows. You're still in a trade, the price recovered, and you might be getting out of the trade. You can see there it's just touching the moving average band, so you would have had a nice little gain on that trade there as well. From that point, you would have stayed in a trade, it recovered, and you'd probably still be in a trade until about now. So that might be time to get out of and take your profits if you're in that trade. Just a trading idea for you. So if you find the 1 hour too volatile, then I suggest looking at the higher time frames to get a bit more stability in the volatility of the CCI. Another example of trading you may want to follow, for example, I've got here the daily, again going long during that period. So you could have gone long when the CCI broke above, but also got the VWAP 50. It's above the VWAP. Notice it hasn't broken below the VWAP until that point there. So that would have been another area to take in that trade. Then likewise, going long when the VWAP breaks above, that would have been a false break to the downside. It broke above again, and you're still in a trade with the VWAP. So there are various ways of entering and exiting. I'm just giving you couple of trading ideas here. Next, we look at silver. Now, again, zooming out, looking at the stochastic market forecast indicator. It's reaching the overbought. It's just short of the just below the 90 level on the daily, and we're above the 90 level on the 1 hour chart. So just be aware of that. Overbought on both the daily and the 1 hour. Now, if I zoom in on the daily first, you can see it's broken above this resistance we had previously, 25.78, and is still no key resistance showing up yet. We do have this trend line we've drawn some time ago. It may actually approach and bounce off that, but again, these are all suggestive. There's no guarantees, of course. And if I zoom in on the 1 hour, again, more volatility with divergence. There's a bearish divergence there versus there, hit our target. Another bearish divergence there and there, hit our target. Actually hit a couple of targets there. And here we had a bullish divergence. That would have been an ideal spot to go long. When you see a bullish divergence in alignment when the daily is also showing a bullish movement on the CCI. So you could have gone long, especially when it broke above the VWAP, and you would have stayed in the trade, possibly gotten out of there, got in again. Now you would have taken heed as well. Notice now we do have a bearish divergence between that high and that low high, that lower high, I should say. And you take the same point from there to that high there. So that's a bearish divergence versus higher highs on the price. So expect a pullback at some point. Next, looking at the US dollar, again zooming out on the daily and the hourly. We're around midpoint on the daily with the stochastic market forecast just broken above. So slightly bullish on the longer term time frame, but just notice as well, if you go back to the heat map, we do have a bullish movement on the monthly and weekly, but bearish on the daily, and this is the daily chart. Notice it's broken below the CCI 150. So carefully, I would still wait for it to break above to be going bullish. I wouldn't be going short at this point, but you can possibly trade short positions. So for example, when it broke below there, you can see there, you probably could have taken that trade there. It was bearish on the daily, also bearish on the hourly. So that would have been a couple of trades you could have taken in there, gotten out of the trade there, gotten in again there, and you may have possibly broken even on that trade there. So again, it's a bit of a risk going short when the monthly and weekly especially are bullish. Now, again, there's no divergence on the daily because they can occur as well, of course. On the hourly, we do have more volatility. So again, there was a bearish divergence there historically. There was nothing there. And you can see there, that's probably a double bottom maybe. Or it's just broken, that low is just slightly lower than that. So to be really strict with the rules, I would not be taking a bullish divergence there because that may well bounce, but ideally you want to see that point there should have been lower, which it is, but that point there should have been higher. So that's not strictly a bullish divergence, so just be careful about going long at this point. I'd wait for the daily to break above the moving average band to take further long trades. And Bitcoin's had a bit of a good run recently. Now you'll notice here it's been just short of this key resistance up there for a number of weeks actually at 73,660. It's actually testing it again, but notice we do have a bearish divergence versus, I would call that a double top. bearish movement on the CCI, so just be careful about going long. On the hourly, and after just zooming out as well on that one, yes, it overbought on the stochastic market forecast indicator. And on the hourly chart, notice it as well, it's in the overbought territory and threatening to break to the downside again. If I zoom in, we had a few, you probably consider that a double top versus a bearish divergence there. And here, likewise, that CCI is moving in line with the price, so no divergence to talk of at this point. So again, just be careful about going, again, the Bitcoin price on the monthly and weekly is bullish, and it's, as you can see here, it's on the daily it's bearish, so just be careful. I'd wait for this to break to the upside before taking any long positions, but I'd like to see this break above the resistance to be more bullish, so I would stay out of the trade at the moment for Bitcoin. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.